Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 274 on 30th of August, end of the month, and what a comeback the market made in the last 6 hours. The market had dipped sharply yesterday, if you remember, and was trying to claw back yesterday itself, but the market today unleashed a one-sided move right from the start till the end, covering all the fall of the week, so on, and in fact making a very large bullish engulfing pattern on the daily chart, and the weekly chart also trying to cross the the sloping resistance line that has been troubling the market since last year. So this week, end of the week, is going to be extremely crucial. The strength in the market seem like we are going to positively cross this and possibly head towards an all-time high very soon. That's how the things are looking as of now. Tomorrow being a market holiday, Thursday and Friday will decide the rest of the week. The topic for today is your portfolio stuck with lagging sectors? So many a times what happens is that since we are not having a strategy where we are able to identify sectors which are not doing well anymore and remove them from our portfolio, and identify sectors which are doing well and allocate towards them, that kind of switch we are not able to do. And a lot of times it is too late before we realize that these three sectors that are there in my portfolio are not working anymore, at least not for the very short and medium term, and I should have moved to some other sectors, because nothing can really be a constant now. I mean, the world is such a dynamically changing scenario, and the companies are getting more and more disrupted from time to time. Different segments are getting disrupted. There is deglobalization issues, supply side issues, so many other issues, so that you need to be on your toes in terms of what sectors you are following. So first, a look at the markets. As I said, just a huge green day. Real estate clocking 3.5%, banking 3.2%, IT stocks, which were very, very weak, up 2.63%. So for the week, down only 1.9% on IT, which was the worst sector for the last week. Nifty closing 2.58%, auto components, autos also 2.57%, and pharma, infra and public sector enterprise lowest at plus 1.3%. So the worst sectors of the day also did 1.2, 1.3%. That was the strength of the day. Overall, over the week, over the month, over 3 months, most sectors are looking good. IT still is not so good over the year. For FY 22-23, it is still down minus 22%, but barring some small fall in pharma, in metals, and some in commodities, all other sectors, PSU banks, autos, consumption stocks, FMCG, and even private banks have done quite well for the financial year so far. Broader indices, Nifty 2.5% up, CNX 200, CNX 500, Nifty Next 50 all between 2 to 2.5%. Mid and small caps slightly slower at 1.2% and 1.7% on small caps and mid caps respectively. Weekend investing small cases almost in line between 2.5% to 1.29%, varying from 1.2 to 2%, most of them, and some above 2%. Small cap stocks, small cases 1.29%, 1.53%, and small and mid caps 1.36%. Mid and large cap small cases up 2.3%, but the largest and the best returns came from NNF10 at 2.42%. NNF10 has been a remarkable strategy with 6 double-digit growth months since it started in November 2020. So we've had fantastic set of numbers from NNF10 since we started. Heatmap for the day. There is no heat today actually. It's all very cool, all green, Levers up 3%, ITC up 2%, FMCG doing well. Energy stocks, Reliance, ONGC, coal all up nearly 1.5 to 2. Banking 3 to 5%, HDFC, State Bank, HDFC, Bajaj Finance, Bajaj Finserv, ICICI, Kotak, all doing really well. Fantastic recovery in IT stocks, autos booming, Tata Motors, Maruti, Mahindra, cement stocks, steel stocks. There were hardly any names that really did not do well. So it was all a huge blockbuster day. Tata Teleservice, after a long time, up 20%. JSW Energy up 7%. Shilpa, NHPC, all cargo, all up between 6 and 7%. Piramal Enterprise, this is a erroneous entry. It was split on a X bonus today, so this should not have been there. Apologies for this. Dhani Services minus 4%. Brightcom, TCI and ID Bank were some of the losers. So the question is your portfolio stuck with lagging sectors? Many a times what happens is that we create portfolios, we choose different sectors and allocate money according to that, but it is not that all sectors will do well every year. As we've shown several times in the past, there will be cyclicality in various sectors. Even if market is running up, some sectors may not do well. Even if market is coming down, some sectors may do well. So there is a cyclicality in every sector. There is a sort of a counterbalance. There is a complementarity in some sectors. There is an inverse relation in some sectors. So not everything will move in one line together. This we need to realize, and we need to study. In case we are doing discretionary investing, then our study should encompass what kind of measures or statistics we will choose to identify which sectors are doing well right now. And if you are using, for instance, momentum like strategies, then of course automatically the best sectors will get chosen, as I will show you. So this is a chart of some of the sectors that we are tracking: energy, auto, consumption, PSU banks, FMCG, public sector enterprise, metals, real estate, commodities, infra, so on, and some indices also thrown in there. This is a 1 month ranking based on 1 month of change. So if I sort this, then metals are ranked number 1 right now, and IT is at the bottom. So on a 3 month basis, PSU banks are at the top. FMCG is at the top on a 6 month basis. On 9 month basis, it is autos, and 12 month basis, it is energy. So again, each sort of time frame is giving you a slightly different picture, but just see where the commonality or the trend is forming. So you can see that in energy, over the entire year, it has stayed in the green. So it is amongst the strongest sectors the entire year, whether it is 1, 3, 6, 9 months, 12 months. Autos also doing somewhat similar, 1 to 8th position. PSU banks also somewhat there. But just see, media is not there. Media 4 months were pink here. And if you want to really see these stark ones, IT has been number 18 for all these 5 periods. Pharma has been number 17 for all these 5 periods. So definitely these 2 sectors currently are not in favor. Yes, they may come back at some point of time, but right now they are not in favor as per this study. So while we want to find out which sectors have done well, just a brief look at this chart itself is telling you energy and auto is the place to be at, and pharma and IT is not the place to be at in terms of trend following. Now, if you want to be a contrarian, you could do the opposite. You could buy pharma and IT right now and try to get out of energy and auto if you think so. But because we are momentum followers, we don't do contra things. We say Bhav Bhagwan Che, BBC is our guiding principle. We will follow whatever the market tells us. However long energy wants to stay long, we will stay long. However long autos want to stay long, we will stay long. However long IT wants to stay low, we will not touch it. That is the sort of principle behind. So just to give you a very brief idea of this, this is how we we can look at these charts on a discretionary basis. We don't use this chart for our strategies because our algorithm will pick the automatic sectors as they come, but this is somewhat a cheat sheet that you can use on a discretionary basis, and this is something that it is also depicted on the chart. So this is the current calendar year. The bottom line here is the CNX IT chart, which is minus 26%. So you can see very clearly the underperformance of the IT sector. The orange line is the Nifty, which is up 2.3% since the entire calendar year. PSU banks, autos and energy are up 18 to 24%. So you can see very, very easily that, the strength has been there in this sector and IT has been weak over the entire one. Now to give you an example of this, how it is translating into strategies, I'll take the example of India top 10, where we take 10 stocks from the Nifty index, and just to give you a very brief sort of a insight into the strategy, 30% of the strategy is into auto and 40% is in power and energy. So 70% of this strategy is currently in the strongest sectors as I showed you in that table. And if you see, there is no IT, there is some pharma, because even within a bad sector, you could still have outperformers. For instance, in IT, Tata Elxsi still is doing very well versus a lot of other IT stocks. In pharma, maybe Sun Pharma is doing quite well versus other pharma stocks. So there may be some aberrations, but largely you can see 70% in top sectors, and then some in FMCG, some in consumption stocks, and maybe some pharma remains the rest of the pack. So this is how the strategies outperform. So this strategy over the last 6 years would have outperformed 242% versus Nifty of 131%. This is a huge beat. And on the downside, it had a 13% better lower drawdown. CAGR would have been much higher. ROMAT ratio also much higher. So it's very simple to actually do reasonably well. My target is that if you are able to be at benchmark or slightly above benchmark, you are doing extremely well. If you can compound at 13, 14, 15, 16% over a long period of time, you don't have to do any rocket science in the market. You don't have to spend your whole life watching the screen. You can just spend 2 minutes a month, do some rebalance, and that should be the end of it. So 100 rupees here could have become 342 versus 231 on the index, and this kind of a compounding is good enough for anybody of any amount of capital that they're putting in. So on the request of many folks, we have extended the special launch of top 10 by 3 days. So this is now valid till 1st September. A lot of folks came back to us and said that please allow it to go beyond 1st September as some auspicious days of Ganesh Chaturthi are also coming, as well as people want to wait for their salaries to come in. So EXT40 is the code that you can use if you wish to go ahead and subscribe to the top 10 strategy. So this is all I had for today's daily bite. I hope you liked the content. Please do make sure that you try to bring in this kind of a sectoral study into your discretionary investing. If you do that, if you don't do discretionary, if you do momentum investing, then you don't need to worry about sectors, because in momentum the survival of the fittest and the selection of the best sectors happens on its own. So it's an automated procedure. Just like the index keeps renewing and rejuvenating itself, each momentum strategy also will keep renewing and rejuvenating itself. So no worries on that, and you can sort of run this on autopilot. So thank you so much for watching, and please do remember to share this with your friends and family who can make use of such tidbits from the market. Thanks. Bye.